Welcome back, everybody. Cheers to another beautiful Tesla day. Happy that we rallied a little bit off of those lows. Hopefully this is some good momentum going into Q3 earnings, which is what today's episode is all about. In today's episode, I'm going to go over my spreadsheet, my prediction for Q3 earnings. But at the end of the day, what I'm going to talk about towards the end of the video is what really matters on this earnings call. And believe it or not, it's not the numbers at all. So don't forget, on Wednesday, the 19th of October, so in 2 days from now, we're going to have this epic live stream. You can find the link right here. Click it, sign up for it. You'll just get notified whenever the live stream starts. It'll start at 3:45 Eastern time, so 15 minutes before market close, and we'll go through a live stream all the way until earnings, post-earnings, reactions, everything. You know, again, you can see who's going to be on here. It's going to be a who's who of people. It's going to be a lot of fun. It's going to be a lot of conversations. People are going to be coming in and out, so it'll be a great time. It'll be a blast. Hope to see you guys there. All right, with that said, we're going to go ahead and get into my spreadsheet, and forgive me, I don't normally wear glasses on this, but I'm going to today, and you might see a little ring action here. So let me apologize for that ahead of time. But with that said, let's go ahead and let me go ahead and share my screen, and we can start taking a look at some of this. Okay, so I'm going to do my best here. This is going to be pretty spreadsheet heavy. I'll try to make sure that my face is not in the way of any of this, and we can get going. All right, so let's actually move this over just towards my Q3 predictions right here. So pretty straightforward. We already know the delivery numbers. We got it right here, 343,830 vehicles. We know there's an extra 20,000 in transit, so that didn't actually get sold, so those aren't counted, but we have the actual delivery units here. All right, so this is the total automotive sales. So to get that, essentially you take the cost per vehicle sold, so the average selling price, and you multiply that by the total delivery units. So pretty straightforward, right? Okay, so how did I come up with my delivery average selling price? So if I open this up, you can kind of see here, I have $57,000. All right, well, how did I come up with that? Well, it's pretty straightforward. I essentially use the same thing the same number that they got from Q2. So it's pretty basic. I actually went a little bit under what Q2 numbers were. Arguably, I should go a little higher just because of where we are as far as when they're raising prices and everything. But I thought this might be a little more conservative. So right out the gate, I'm trying to be a little more conservative. On top of that, let's look at the next line. Regulatory credits. This is always a guess. But if you go back, you can see it's not until Q3 of 2021 did we see something below 300 million. And even before that, right, we didn't see anything under 300 million. So I decided let's be conservative and let's just stick with 300 million for this one. Next up, energy sales. So energy sales, I am feeling a little bullish on it. And so this might be an area where I'm wrong. If I'm wrong, I don't think it makes that big of a difference in the numbers. But if you see last quarter, sorry, I'm fidgeting here, this thing got loose. Last quarter, we saw 866 million in energy sales. So I estimate that they were able to ramp that up a little more. Again, this is a smaller ramp up than what we saw even from Q1 to Q2. So hopefully this is pretty reasonable. And we'll talk about the gross margins on this in a second. Services and other, this is something that's like really hard to ever gauge. It's a complete guess. So I just stuck with what we had last time, and we'll see what happens. So what do we get for total sales? Total sales excluding regulatory credits, we get $22 billion. Massive, massive quarter. And keep in mind, if you look, this is the biggest quarter they've ever had. So even if I kind of go back to all these other quarters, everything's trending in the right direction for us. All right, so let's scroll down a little bit. So automotive profits. So again, this is one that can get a little weird. You can see here how I did it. I multiplied the total deliveries by 16,944. Okay, well, how did I figure that out? Well, what I essentially did was I took the profits that we saw from Q1 and the profits we saw from Q2. I added them together, divided by 2, so I took an average of them. Why did I do this? Well, if you remember in Q1, we weren't assuming any penalties, if you will, or any drag down from earnings because of Berlin and Austin, right? Once Berlin and Austin opened up, that's a drag down on margins because they aren't produce any vehicles, right? So we need to depreciate those assets. So what I did was I took the Q1 and I took the Q2 and I figured somewhere in the middle is probably where we are. Q2 saw a big penalty because of Austin and Berlin, and I figured Q3 we're probably more or less out of that, right? I believe Zach said that Berlin is already margin positive, and I think Texas probably is by now already. So that's pretty much what I got from that. If anything, once again, you could say that my numbers are conservative here. So I'd rather lean on the conservative side and try to be, more optimistic about things. And I think you'll see my numbers are still pretty nutty. Regulatory credits, that remains the same. Energy profits. Okay, so I believe last time, 11%. Energy had 11% margins on it. I think that they were able to make some incremental improvements, so I put 13%. And so that's how I got to 124 million in profit here. Again, these numbers are so small when you're talking about billions of dollars that this isn't really going to move the needle no matter what. So even if I'm wrong here, which is the only real thing I'm being optimistic on is the energy side of it, even if I'm wrong, it's not that big of a deal. It doesn't move the needle. All right, going to services, other, and profit. So this, again, it's a complete guess at this point. So I just put 50. Again, I think that's kind of conservative. I mean, you can see that we've been trending up more or less from these low numbers to these negative numbers. So I figured 50, I mean, if they were able to do 56 last quarter, 50 should be conservative in my opinion. So total gross profit comes at $6.299 billion. Massive. Let's see. Automotive gross margin. So this is where hopefully things start to turn back up for us. I don't think we get back to Q1 numbers. I already talked about that, the hit we take from Austin and Berlin. So you see those still having a little bit of an impact on Tesla. And that's why we only see a 31% automotive gross margins. But that's an improvement from last quarter where we took the brunt of that Austin and Berlin hit at 28%. So we'll see how that plays out. I'm feeling pretty confident in these numbers, but again, we'll just have to see. Now, if you take out the gross margins, if you take out the credits from the gross margins, you can see that here it's not even a meaningful difference. It's a 1%. It's actually less than that, right? I think it's just in the decimals. So the important thing here really to note is that where before the credits were a big part of the story for Tesla to be profitable, now it's just becoming such an insignificant part of the story that it doesn't even really move the needle on the gross margin. So that's what we like to see. Energy, we already touched on that, 13%. I mean, this seems kind of reasonable, I think. I mean, we can see what it's been historically in the past. So it's been a little bit all over the place. We haven't seen a lot of consistency with the growth story when it comes to Tesla Energy, but hopefully we're starting to see some progress. So I'm here once again being bullish, but again, we're in the hundreds of millions when we're talking about billions. So even if I'm wrong here by a lot, it's not even going to move the needle. Services another 3%, total gross margins 29%. All right, all that's pretty straightforward. All right, let's look at this. So R&D, I decided to go with 865. Again, I'm just pulling this number out of the air. Why did I do this? Well, I think it's more conservative. If you look at here, Q1 was kind of one of the higher months quarters we had, 865 here. If I scroll back, you can kind of see these numbers were never at 865. So I'm choosing intentionally a higher number here. Same right here when it comes to SG&A. I went ahead and put in $1 billion. And again, it's not the highest we've seen because if we come back here, we can see that Q4 of 2021, we saw a really high hit here. But again, you got to keep in mind that this is when Elon was selling. There's a lot of extra tax expenses that had to be accounted for. So this is kind of an anomaly, but 1 billion, if you scroll back, it should still be kind of a high watermark. It wasn't until Q1 of 2021 that we see that kind of number. So I feel like 1 billion is pretty conservative. Operating expenses, pretty straightforward. Operating income, again, pretty straightforward. But here's what's a big deal. Operating margin percent. So we finally break that 20%. That's my prediction. This will be a big number. And again, you can just see how things have trended, right? We were stuck at 11%, at 14%. And you remember back here, this is where these 14% were really artificial because we had these extra one-time hits that Tesla was taking. So all of these were kind of artificial. If you backed out some of the one-time hits like the extra tax expenses or whatnot, you would see that these numbers would have actually been a lot higher. Q1 2022 was the first time we actually got to see what that operating margin, what that operating leverage could really look like. But then we hit Q2, and guess what? Well, this time the big hit was the zero COVID over in Shanghai and the lockdowns. So hopefully here we get to rebound very strong and we get to see a 20 handle on this percentage number. And again, this is the big story when it comes to Tesla, is this operating expenses, right? Look how low this is. This is, to put this in context, this is lower than I believe what Rivian does on a quarterly basis. And Tesla is making so much more profit, putting out so many more vehicles with so much more in R&D, everything they're doing with Dojo, all the FSD stuff, right? And these other companies aren't doing any of that. And Tesla still has less operating expenses than all of them. And I won't lie, I won't be surprised to see this come down. I would be very surprised if this isn't lower. So keep an eye out for that. All right, scrolling down. EBITDA, this is always my hardest one to really approximate. So I'm not going to spend too much time on this. Essentially, I'm calling for 5.6 billion in EBITDA. I think the trend is pretty solid here. So we'll see what happens there. But I feel confident about this number. Net income, we're looking at 4.6 billion. Stock-based comp, this, again, I'm just kind of copying and pasting what we saw last quarter. Elon's compensation plan, I believe, is 100% done now. So this would essentially just be from current employees. And I believe it was done last quarter as well. So I just went with the same. Again, when we're talking about these, a million here, a million there, even if it's 20, 30 million, it's not moving the needle when we're talking about billions. So net income, minus, so GAAP essentially versus non-GAAP, we see 4.2 billion. And here are the main numbers you guys want to see. So non-GAAP diluted EPS, I come out to $1.55, and EPS GAAP, I come out to $1.43. So let me know what you guys think. These are my numbers. I feel like they're pretty conservative. Normally, I'm not one to go that conservative when it comes to my numbers. So hopefully, this becomes more in line with what we actually see come Wednesday. And again, make sure you tune in for our live stream. Again, it's going to be Gary Black, it's going to be Ross Gerber, it's going to be Baby Boomer Mama, Alexandra Mers, Farzad, Yashu, myself, Matt. Emmett might show up from Good Soil, from the Good Soil podcast. So it's going to be a great, great time. But let's talk about what I was mentioning earlier in the video, where I don't think these numbers really matter in the big scheme of things. Look, for Tesla just to hit par on this earnings call, they're going to have to beat revenue, top and bottom line expectations. Okay, so they're going to have good EPS, GAAP, non-GAAP. They're going to have good revenue. But what's really going to matter are two things: their words with guidance and their words when it comes to China demand. That is what they want to hear. That's what the market wants to hear, and that's what this whole story is going to be based off of. If Zach, Elon, and Drew can thread the very simple needle, which is essentially to say we have no demand issues, and don't just say that, hopefully that's the truth, but we have no demand issues. We will sell every vehicle that we can produce, and that moving forward, we still anticipate hitting a 50% growth year over year. Now, maybe they contextualize Q4 that there's still a shot, right? I think Wall Street might like that if they insinuate that, but maybe they give some, hey, guys, look, we will hit probably 50% year over year production. We're not going to be able to hit deliveries probably because, one, we're trying to get rid of the wave, and two, we had essentially 2 months of shutdown from our highest producing factory. So, give us a break here. Like, what do you expect? At least we'll have the production. We're telling demand's good. We'll sell every vehicle we can. We need to smooth out this wave. So this is where we are. We are maturing as a company. We can't keep having these quarterly end pushes. We need to evolve. And really, Wall Street should respect that, and Wall Street should reward that. Now, on top of that, if there's anything extra, right, anything extra said that's positive, this will buoy the stock. So at this point, it's got nothing to do with the numbers, in my opinion, at all. It's all about the messaging and the guidance given by Tesla and the team. All right, we're going to leave it there. Quick video this time. Don't forget, again, sign up for our live stream. Again, you can find the link down. You can find it in my channel. So go find my channel, my upcoming live streams. You can set it so you can get notified. You can also watch it via Farzad's channel. You can watch it through Good Soil's channel, and you can watch it through Yashu's channel, right? This is going to be a multicast stream. So we're going to try to get it out to as many people as possible because we want everybody to come in and join us for the party. All right. Again, cheers to all of you. Happy we finally had a green day, and hopefully you enjoy your evening. All right. I love you all. Thanks for watching. Peace.